Thank you.
Flat slightly to the negative today, despite the fact that Europe is in positive territory. We've got the US market sitting in positive territory. We had a better than expected retail sales number out of there, but the SA market lagging somewhat.
Yeah, and it kind of surprised me a little bit. And I think at the start this morning, we saw a little bit of a better start, and you saw that Rand push out towards that R8 level. My thought was you would see that help a lot of the resource stocks. And I think generally the sentiment over the last sort of 2, 3, even 4 months has really been focused more on the industrial space as opposed to that resource space. So I think that sentiment continues to persist, although you've had some very strong performances in some of your industrial stocks. So, you know, we're sort of at a tipping point where are we going to start to see some sector rotation out of that industrial space, possibly into that resource space. But
we've been beating on that drum for quite some time.
And we have, and I'll put my hand up as well. I have been beating on that drum.
Have you been doing it though?
Yeah, I have been doing it for a lot of client portfolios. But I think, you know, the market where it is, it's almost sitting on a fence, kind of trying to decide which way it wants to go. And if we are going to see another leg to the upside and possibly some further highs in this market, you need to see those resources come to the fore. So, yeah, it's a very difficult space. And, you know, the GDP numbers in China or in the East didn't really help last week. And although you saw markets in the East positive on the back of that, where do we go from here?
Okay, so, I mean, are you expecting resource counters to do well? There is a concern out there, and because we actually saw BHP Bulletin talking of iron ore demand out of China, it is a bit worrying. We're starting to see a lot of these companies coming out with worrying messages to investors, and this is reflected in the PE ratios. Yes. Earnings are looking good, cash on the balance sheet is looking good. There's no reason why not to buy these stocks, but it's not happening. Correct,
and I think, you know, stocks remain cheap for a reason and stocks remain expensive for a reason. And I think exactly as you said earlier, just on a pure PE valuation, these resource counters are looking attractive. Yeah. When you start to see that change in sentiment is a very difficult thing to predict in terms of timing. So if you are a portfolio manager and you're looking to invest clients' money, you say, well, what are the valuations out there and which are looking attractive? In terms of getting the timing 100% right is quite a tricky thing, and you know, you do need an element of luck on that side. But from a valuation point of view, you've got to start saying you've got to weight yourself, you know, in the resource space, and maybe look at down weighting a little bit in the industrials after the run that you've seen, particularly in the retailers and the SABs.
So what are you down weighting in then?
Well, if you look at it, you can look at the run and you look at the valuations on something like SAB. Obviously, you saw some important information flow that's going into Africa and what have you, and I think that from a valuation point of view, it's fetching quite lofty valuations. And again, a little bit against what the sentiment says out there at the moment, I think these retailers are starting to look quite expensive. Not to say that I would sell my entire holding, but the money that I've made...
So what have you held on to then? I mean, you've obviously offloaded a bit of SAB.
Yes, SAB, I've been looking at down weighting a little bit in Tiger Brands. You look at something like British American Tobacco that's starting to look a little bit lofty, around 400, could maybe go a little bit further, but it's more the specific keyword here is down weighting. So I'm not trying to call a top on it by selling my entire holding. It's just really sort of locking in some profits and seeing where the value is in the market at this point in time and looking to upweight in some of those spaces at this point.
Old Mutual is down over 5% ex-div today.
Yes.
Nedbank also down, obviously.
They went ex-dividend today. It was a very nice dividend. They paid a very nice special dividend to the tune of about R2.60, somewhere around there. And they also did a consolidation. So, you know, that helped actually buoy the share price this morning and throughout today, although you did see it down, you know, in line with that dividend. So I think, you know, it's now a question looking at Old Mutual. You know, the reason why they paid that special dividend was through the sale of some key assets. The question is now, where do they go from here? Do they sell more assets to start accumulating further cash on their balance sheet? But, you know, also I think just looking quite lofty here.
Envelopandus selling its holding in Life Healthcare. I mean, obviously unlocking value for shareholders. Do you think this was a wise move? I know a lot of investors out there very bullish on Life Healthcare.
I actually love Life Healthcare, yeah. And I think it's been a phenomenal stock, and it's done some really great things over the last year to 18 months. But, you know, looking again from a valuation perspective, you've got to start to argue, is it starting to look quite rich in its price? And it is actually. But, you know, I'm always of the opinion that in any portfolio, you've got to have some pharmaceutical exposure, you know, whether it's through something like Aspen or a Life Healthcare or a Supplement, you know, depending on the risk parameters that you fall under. You know, I think that it's probably a strategic move by Mfelopane to start saying let's downweight a little bit and maybe start selling their exposure. But there could be some continued upside, I think, in life healthcare. So it's maybe just unlocking some cash, looking for further opportunities as they look forward.
Deryck, very quickly, what is your sense in terms of returns for the JSE this year?
Look, it's
making you commit, of course.
No, that's fine. Look, it's been a very strong January, February. You can even argue March, we sat on these lofty levels and we're coming off now. So my sense is that you're going to start to see this market bumble around for the next 3-4 months, maybe trickle down, give you moments of excitement to the upside, but you're really going to start to see the run in this market, or I wouldn't say a run, but that spike in the market towards the latter part of the year. And I think that there could be a 38,000 on this market, and then again maybe come off from those highs. So somewhere between the range of around 37 and 39,000, around that 38,000 mark is my expectation.
Fantastic. Thank you so very much, Deryck.